Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 13th through January 17th of 2025. We're in part one of our weekly trading game plan. We'll strive to help you see how you can make money trading in January 2025. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of January 13th through January 17th. We keep our weekly trading game plan notes in a publicly accessible Google Drive or Google document. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for the week. You can find a direct link to this Google document in the description box below. We store all of our Google documents for our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes documents for this week, as well as previous weekly trading game plan notes. And you can find a direct link to that Google Drive folder also in the description box below. So firstly, we'll see how the markets ended up on Friday. So we'll go to the main page in FinViz. See the markets had a pretty steep decline on Friday. We'll talk about the cause for that, the non-farm payroll jobs data, and possible future implications of that data. So we see all the indices were down significantly. Dow down 1.63%, NASDAQ down also 1.63%. S&P down 1.54%. We had 80% decliners, only 17% advancers. We've now only got about 23% above their 50-day moving average, 77% below, and now we've only got 43% above their 200-day moving average, 57% below. A very bearish day, and again, a lot of weakness under the covers. So as we'll see, potential future or further downside to come. Heat map wise, see the Mag 7 took a major hit, probably a lot of profit taking, people getting their profits while they can out of the Mag 7s. The only sectors in some green, consumer defensive, consumer, and Lilly, and home supplies, Home Depot. Meta had a positive due to the TikTok ban ruling coming out of the Supreme Court. Energy is a positive. Look at some of the news. Labor markets upside surprise. Market turmoil UK. Trump bump nearly erased thanks to bond sell-off. Blowout jobs report. Again, we'll talk about the jobs report impact and the cause for the decline in bouncing yields due to the jobs report. Stock slide, bond yields jump after strong jobs report. Again, all about the strong jobs report. Welcome, Fairchild. Thank you for joining us. Hope you're doing well. Had a great trading week. See, oil broke out above that 75, so now it's got good support at 75, up in the 76 now. Natural gas hits resistance just above 4, so it's testing that resistance. Again, the upward trend in natural gas. Gold broke out over that 2,700 level now, range bound between 2,700 and 2,730, 2,750. So gold resuming an uptrend again. See, all the market futures are pointing strongly down, with the Russell significantly more down. Saw a surge again in bond yields. The 30-year is now testing that 5% level, 10-year 4.77, 5-year at almost 4.6. So bond yields surged up, bond prices surged down. Bitcoin dropped, also on that risk-off move, down to the low 90,000s. Got resistance at 95 now, support at 90. Welcome, Katon. Thank you for joining us. Hope you had a great trading week and are doing well. So now let's look at a breakdown of the major indices and the technology components. Just a quick reminder, you can access these screeners in our notes documents, as well as in the screener sheet of our ETFs and Watchlist Google Sheets. So we see it wasn't just Friday that we had several down days, all job data related. See the Dow broke down out of its channel, kind of hanging in midair, very near that previous low. Again, a post-election, a pre-election low. So I would expect it to test that low. Again, a lot of downside down to the 200-day. IWM, again, tested the 200-day moving average, did get some support, but it's also below its channel. Again, we'll talk about why there's a lot of potential downside in the Russell small caps due to these higher bond yields, higher interest rates. And it's got quite a bit of room down to test its pre-election or the September low. Q's a little bit stronger. Looks like it tested that 500 level or so, but it's below its 50-day, provide resistance. Got a lot of room again to its pre-election low at about 480 to its 200-day, so a lot of potential downside in the Qs. Similarly with the SPY, although a little bit more resilience down below its trend. So that trend line providing some resistance, got more downside to the pre-election low and also to its 200-day. So a lot of potential downside in all of these indices, in my humble opinion. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. So if we look at the technology components, again, risk off day on Friday. So ARK-K got hit, got some resistance from its 50-day, but you can see that large gap, plenty of downside. So again, the short on ARK-K is SARK. The FANGs, the Mag 7s held up a little bit better, got support from its 50-day. Got this double top, now going to provide some level of resistance. But again, I think the buy the dippers will continue to buy the dip in the Mag 7. So the FANG's probably going to be more resilient, probably continue to get support from that 50-day, again, with the buy the dippers. But again, we've got a lot of potential downside if those do break down. Semiconductors didn't move a whole lot, so we had some positive and negative out of CES, etc. So NVIDIA positive, some negatives. AMD really took a hit, but since it was a mixed bag, they're holding up pretty well at hovering around that lower trend line. Got some resistance from the 50-day. Biotech, and we'll talk about this. We've got the JP Healthcare conference going on. So they got hit pretty hard on that bond yield surge, a risk-off move. So big drop in biotechs, but they might get some pop out of that JP Morgan conference. So the long on biotechs, Lab U, short Lab D. I expect a lot more volatility this week in biotechs due to those factors. Yeah, TQQ just leveraged on the Qs. You can see the broader technology sector is weaker, so it did get some support from its 200-day moving average, did test below that. It breaks down below that. Again, a lot of potential downside. We've got the pre-election low, and then we've got the September low. So again, a lot more potential downside in broad technology. Okay, let me grab a quick drink and we'll go over the groups, sectors, industries, and look at some opportunities for sector rotations like we talked about last week. Okay, if we look at the groups and sectors for this week, we can see Friday, the only positive one was energy. Again, we talked about this rotation and last week with the January effect, etc. expecting sector rotations from lagging sectors to leading sectors. And we're seeing that now in energy and basic materials and healthcare. So energy positive, but basic materials and healthcare, the least negative. Most negative, technology, financials. Again, that was strong last year. And again, real estate very sensitive to interest rates and bond rates. So it took a major hit on Friday. So again, for the week, we can see that sector rotation. Again, the only positives really were energy, healthcare, basic materials. Again, a lot of profit taking out of financials, technology. Again, real estate suffering from high bond yields. Also wanted to go back as we talked last year on the January effect, etc., expecting that rotation from laggards to leaders, leaders to laggards. So we could see last year the lagging sectors again were basic materials, healthcare, and energy, and now we're seeing a rotation into those sectors and out of your stronger sectors, technology, financial, and financial. So again, we're seeing this January effect, laggards to leaders, leaders to laggards, start to play out a little bit. We look at the industries, again, not a whole lot, some renewable utilities, pharmaceutical retailers, again, possibly front running that JP Morgan conference. Oil, again, we saw oil back up over 75. Gold rebounded a bit. Again, basic materials. Most negative from Friday. Coal, we'll talk about a potential opportunity in coal tomorrow. I looked at uranium. Again, uranium's been kind of rotating, cycling back down. So I keep watching for an opportunity as uranium cycles back down. Been quite a bit of volatility, but again, waiting for that to cycle back down. Looking at some of our favorites, UROI, LEU, DNN, etc. I know CCJ is very popular. It's like it's got some support. For the week, again, pharmaceuticals, airlines, oil, basic materials, copper rebounded, gold, steel. Again, uranium pretty negative for the week, coal pretty negative, REITs. So again, if we look at that last year, look for that sector rotation, that January effect. So we see utilities were strong, internet, oil and gas midstreams, gold pretty strong, silver. So if we look at some of the laggards, again, solar is going to be sensitive to interest rates. And we're seeing that rotation. Pharmaceutical retailers were the weakest from last year, and now we're seeing the past day and week that pharmaceutical retailers are the strongest sectors. So again, we're seeing that rotation, that January effect play out on an industry level as well. So I hope that all helps. And yes, Ketan's pointing out that the problem with uranium is the production time, and yeah, there's a lot of hype. We saw that, spike up in uranium with the Constellation deal with Microsoft, etc. But again, bringing new production online from particularly a mining standpoint is, a decade long endeavor. So I expect, some further downside, but we play that cycle over and over and make money. So I hope that all helps. So now we'll look at the economic data from last week, the upcoming economic data for next week. Just a quick reminder, as the important economic data and economic news comes out, I try to capture that as quickly as possible, post that in our Discord. Our Discord's free to join. You can find a free invite to our Discord in the description box below. So again, as soon as that important economic data, important economic news comes out, I post that in the Surf the Markets channel of our Discord. So you can see, capture a screenshot from investing.com, the raw data. And again, if there's other important economic news, post that. So our Discord's a great source of real-time economic data, real-time economic news. Can also chat about all things trading, different asset classes, different trading styles, 24/7. You can join all your other BeachBum traders and again chat 24/7 about all things trading with a group, a community of that fits your trading style, trade your types of asset classes. So we'd love to have you join and actively participate in our Discord. And again, a great source of real-time economic news and economic data. So just some highlights of economic data and news from last week. As we mentioned, last week we had the CES, Consumer Electronics show going on the majority of the week. I'm sure a lot of you are aware of Jensen Huang's NVIDIA's keynote address Monday night, gave a big boost to NVIDIA. And then also some commentary about quantum computing. On my humble opinion, I agree with Jensen's assessment of quantum computing has a lot of potential, but it's a long way away from being something practical that we can use every day. I can babble about that in more detail maybe at some point. But all the high-flying, overly hyped quantum stocks took a big dump on that comment from Jensen Huang. So Wednesday, we got mortgage data. Again, bond yields been high, so mortgage rate went up to almost 7% again. So mortgage applications down, purchases down, refinances holding up. And we got the first taste of employment data with the ADP employment change. It was positive, not as much as expected, but again, still pretty resilient. We got jobless claims less than expected. Continuing claims went down, went up a little bit, but less than expected. And the 4-week average actually went down. So here again, on Wednesday, we got our first taste of data showing that the job market continues to remain resilient. Therefore, the Fed doesn't need to cut further. They don't need to be concerned about jobless claims or the job market. They need to focus on keeping inflation down. And there's a lot of risks for sticky, if not increasing inflation. Thursday, market was closed in memory of ex-President Jimmy Carter. So we hope you enjoyed your day off. We're able to take advantage of that. Then Friday, we got non-farm payrolls and more jobs data. The key point was non-farm payrolls for December was up much more than expected. Government payrolls up a little bit. Participation rates steady. Private up significantly more than expected. Unemployment U6 down. Unemployment rate in general down a little bit. So again, we've got all this data that shows that the job market remains resilient. It doesn't have to worry about the job market. They need to focus on inflation, which again means they're not going to cut further anytime soon. And there's even talk they may need to hike. In my humble opinion, I don't think they're going to hike again, but I think they're going to hold rates where they are for a very long time. And they've been saying for a long time, higher for longer. So the market dumped and adjusting to that realization that rates are going to stay pretty much where they're at for an extended period of time. Also got Michigan sentiment, showed that their 1-year inflation rate still above 3%, 5 years still above 3%. So the consumer seeing higher inflation for longer. Sentiment lower than expected, dropped a little bit, and current conditions were up a little bit, but again, sentiment down. So again, the consumer is expecting higher inflation, so that's a negative for the Fed. And again, another reason for them not to cut, at least hold rates higher. And now, again, people are talking about a potential hike. Again, my humble opinion, I don't see them hiking further. Welcome, Sydney Osborne, Gerald Fitz. Thank you all for joining us. Hope you had a great trading week and are doing well. So if we quickly look at the other economic data from this week, and we'll look at what's upcoming from next week. We've got Fed officials talking. It'll be interesting to hear going forward how they interpret this stronger than expected jobs data. Durable good orders down, factory orders down. Trade balance in line. ISM non-manufacturing. So this was also a reason the market kind of dumped a little bit. Prices were a little high, so manufacturing prices were non-manufacturing prices up more than expected. Also, we got jolts went up. And again, another reason the market dumped this week is now we've got more openings. So job market's getting more out of balance. So we have fewer jobless claims. We've got more openings. So again, that's something Powell has commented on. Again, shows a discrepancy between those looking for jobs and the current jobs open. GDP is still good, no fear of recession. And we talked about mortgage rates and ADP, and jobless claims, oil inventories down, less than expected. Again, we saw oil bounce up. Consumer credit drop, so that's interesting. So maybe the consumers paying down some of their debt. Be wise. Friday, we talked about the payroll, non-farm payroll data, Michigan sentiment. Baker Hughes dropped a little bit, so again, less supply, so possibly cause for some of the increase. Also, I heard there's some issues with some of the rigs. Total rig count dropped, so again, less supply. So again, possible cause for the bounce up over 75 for oil. Got next week. Do me a favor, Katan, and remind me of that again when we get to ETFs, if you would. Thank you. Okay, next week, not a whole lot on Monday. Tuesday, we get core PPI data, so supplier inflation. So if this is hotter than expected, watch out. Again, more potential downside for the market, saying inflation's sticky. The Fed can't cut, and the risk of a hike will probably go up. Here, the Fed officials, mortgage rates Wednesday, and we get CPI. So again, very important Tuesday, Wednesday. If this inflation data comes out hotter than expected, or it's even not going down, the risk of a rate hike is going to go up. The probability of a rate cut anytime in 2025 is going to go down. Market's going to react negatively like it did this week. So again, protect your profits, protect your positions. Beige book, not real important, but the Fed notes pretty much said what we thought. Thursday we'll get jobless claims weekly, so we'll see if that changes. Again, now that's a focus, could be a source of market volatility. Housing, I expect housing to continue to be weak due to high mortgage rates. Friday, more building data. Again, I expect housing to be weak. And then I believe we're starting into the next earnings season. So we'll look at earnings for next week. And I'd highly recommend you go through the list. KB Home, so we've got more housing data. Here's one we've been watching in the past, made good money, AEHR. So semiconductors, got some tech, Applied Digital. All the banks are going to start. So then Wednesday, we start to get the major banks, Goldman Sachs, Wells Fargo, JP Morgan, so watch financials. Taiwan Semiconductor, that should be a positive for semiconductors. United Health, healthcare, banks, more banks. So again, we're just starting out into this cycle. So the financials are going to lead, and then we'll start to look more at the Mag 7s, etc., probably next week. But again, I highly recommend you look at the earnings calendar, see if that would have any effect on your trading, your positions, same sector, sentiment, etc. Again, reminder, the JP Morgan Annual Healthcare Conference is the 13th through 16th. Again, listen for mergers. I think we'll see some mergers and acquisitions, probably the large pharmaceuticals buying up some biotechs, some small biotechs, deals between some of the majors, etc. But again, M&A type activity, my humble opinion, likely to come out of this. So if you're into trading biotechs, again, I think some of the promising small biotechs are going to get scooped up by the major pharmaceuticals that have cash and need future drugs. So again, a lot of volatility in the biotech sector. Friday is OPEX for January. Again, the next FOMC meeting is not till the end of the month. And we talked about earnings. You can hear how we trade around earnings via the link to the video in our notes. Welcome, MD. Thank you for joining us. Hope you had a great trading week and are doing well. Let me grab a drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get up to 43 fractional shares of stock, each worth $3,000 to $3,000. If you open and fund your account with $2,000 or more, under $2,000, get 20 free fractional shares of stock. If you use our affiliate link in the description box below, take advantage of your free fractional shares, also any other current promotions that they're offering, and also help support our BeachBum trading community, which we greatly appreciate. I'm looking at the online browser market screen, online browser version of the market screen. Very interesting. We can see many more decliners than advancers, and the percentage of advance is significant. So again, a lot of downside weight in this histogram, very few advancers, very few significant advancers. Net inflow is interesting because the NYSE was still significantly positive and increasing throughout the day. And although the NASDAQ was negative, the trend was slight. So typical NYSE positive, NASDAQ negative on Friday. But NYSE pretty strong for such a negative day. See, we've got a 29, so fear on the fear gauge. Last week was 29. Last month was neutral. We look at the history, kind of at the bottom of the recent fear level, but again, not extreme fear yet. So to hit a bottom, I probably have to hit an extreme fear, but we're at the lowest since pre-election. So we're below the pre-election fear level. Okay, you can also see the earnings calendar in the calendar section of the market screen. So you can scroll to next week. Okay, we go to next week. You can go day by day, see who's got earnings, what time, etc. So again, quick and easy way to see the upcoming earnings in Webull. Look at the best performing industries for the week. So some transportation positive, healthcare pretty split, household pretty split, oil and gas positive. Again, we saw oil increase, healthcare pretty positive, retailers pretty split, and oil and gas positive. Communications negative, Metals and mining, pretty split. Utilities, mostly negative. Pharmaceuticals, pretty split. Renewables, mostly negative. Chemicals, mostly negative. Semiconductors, pretty split. Looks like Micron positive. Got the ETFs. I think that's probably short small cap, short the Russell. I think that's emerging markets short. Short the Dow, short the S&P, short mid caps, short the NASDAQ. Up on the VIX, so we'll see. I think the VIX was in the 19th, so I don't think it broke 20, but so all up on the VIX and down on small caps, down on the Russell. Industries, jets, positive. That's airlines. Industrials pretty negative, so pretty much everything up except for energy was negative on Friday. So the most negative, healthcare, financials, utilities, communication, and almost everything pretty negative from Friday. Commodities, natural gas up. FXY, yen. Okay. So if we look at the futures as well, just a quick reminder too, you can now trade 24 hours a day on Webull, so you can get more information via our video and also in this Discord posting. You can also trade futures now in Webull, so you can get more information on trading futures in Webull via the link to the Discord posting. So if we look at the futures in FinViz, so again, we see this, steady declines in all the major indices. See a little, resistance in the Dow at 4,300. That pre-election low, I expect it to test that. Again, a lot more downside in the S&P. Looks like it broke its previous low. Again, plenty of downside, to a pre-election low. NASDAQ looks like it's getting pretty good support around 2,100. It did test below that. Looks like it got support there. So if that holds, might get a bounce. Otherwise, further breakdown to the mid-November low. Russell, again, much weaker and again, much more vulnerable to high interest rates, to high bond yields. Again, it's very hard for these small caps to get loans, etc., or if they do, much higher rate. So again, I expect further significant downside in the Russell. Nikkei rolled over as well, although Euro stocks holding up, DAX holding up, and VIX didn't quite make it to 20, but it's in the 19s. Expect further volatility. And oil tested all the way up to almost 78, back down, got support at 75. So strong surge in oil. Again, we'll look at ETFs if you think this is overdone, want to short oil like DRIP or SCO. Again, heating oil, natural gas, again, colder weather, both positives for those. Brent hit 80 and retraced. And we saw gold break out above 2,700, so it's got support at 27, probably resistance right around 2750, so probably trade in that range. Silver broke out above 31. Looks like it almost tried to test 32, came back into 31. So now that 31's a support. Got resistance around 33. All the other metals bounced back up. Platinum, palladium, copper, strong rebound. Ags, corn rebounded. Soybeans, strong surge up. The only one that's weak is wheat, and that's one we're actively watching for a bottom using the WEAT ETF. So it got rejected again at that 540, 541 level. That seems to be a resistance point. next support right around there, so it's pretty close to that support. Next low, I think, is around 501 or so on slash ZW. So that one's we're actively watching for another long. We swing wheat with WEAT profitably, and that one's, again, I think, a great opportunity. Lumber back up, coffee pretty steady. And we see that steep decline. Bonds just continue to plummet. So bond yields up. I expect them to test. The 30-year is going to test that 5%. My humble opinion, I think it'll probably reject from that. So I might see a little bit of a pop back up in the bond prices as they reject off their previous highs. But again, these bond yields are higher than when before the Fed started to cut, before their 50 basis point cut back in, what was it, August or September. So in my humble opinion, this is a little bit irrational, and I think some correction is warranted. So we're long TLT using TMF. And we'll look at the bond ETFs again. I expect, that will correct at some point. Dollar strong, looks like it almost tested 110. Again, very strong uptrend in the dollar, so all the foreign currencies down. Did look like the yen may have found a bottom, so again, we're looking for a long in the yen using YCL. We'll talk about this more tomorrow. I've got the next BOJ interest rate decision marked, and that's upcoming soon. And again, it does look like the yen may have found a bottom. So we're looking to get long the yen using YCL, and we'll look at the ETFs as well, but all the other currencies steeply down. Like the euro is probably going to test, close to parity. And that may be the support level in the euro, my humble opinion. It's interesting. D says the gas pipe to Vegas was shut down due to power outages. I don't know if that was related to the fires in California or the weather. Welcome, Walter Lyons. Thank you for joining us. Hope you had a great trading week. And yeah, PPI and CPI both next week. So again, a lot of potential for more volatility and more potential downside. Okay, I'm going to skip forward. We'll come back to ETFs. I want to talk about our theme for this week, our trading strategies, etc. I'm going to grab a quick drink and we'll talk about our theme for this week. Okay, again, our theme for this week is to make money trading in January of 2025. So firstly, we'll look at the seasonality, the trends of the months in this investing.com article. So it looks like they changed their graph a little bit. So here's the average returns by month, and they've broken it down 20 to 2024, and then 1928 to 2024. So we can see now here's January. So we see January for 2000 to 2024. The average is a slight negative 0.15. We look 1928 to 2024, it's been positive 1.17. So over the past 24, 25 years, January has actually been negative. Before that, or the average across past almost 100 years, it's been positive. They'll see February tends to be negative in the past 24 years. So again, the next couple months, potential downside. So the bet would be protect yourself from downside, protect your profits. Again, we can trade short. We've got ETFs you can trade short. So again, the historical tendency has been down. Not to say every year is going to be down, going to follow these tendencies, but again, the historical averages say the past 20 so years, January's been slightly negative. Longer term's been positive. And then again, February tends to be negative as well. So we're definitely on a downward trajectory. Then in March, April, we get a rebound. So again, the tendency, historical tendency would be looking down. And you can read more about the historical best times, day, week, month to trade stocks via this Investopedia article in the notes. Also, we have previous articles on or videos on how to make money trading in January. Last week, we talked about how to make money trading the January effect, what that is, and then we'll talk about as January ends up, what the January barometer says. And if you're looking for, again, previous analysis on how the markets perform in January and the best performing sectors and industries in January, you can access those via the links in our notes. Also, links to making money trading in the winter, how markets perform in the winter, best performing sectors and industries in the winter. All those videos in our notes. Additionally, I wanted to see, particularly for 2025, be an inaugural year, the first year of Trump's presidency, second presidency, how the stock markets might perform in 2025. So I asked ChatGPT this question: how do the stock markets perform in January of a presidential inaugural year? And you can access the full link to ChatGPT's answer via the link in our notes, but we'll quickly go over that. So here's ChatGPT's answer to my question: how do the stock markets perform in January of a presidential inaugural year? See, performance in January during inaugural years can vary based on factors, economic conditions, investor sentiment, and anticipated policy changes. So that's a good one. We know a lot of tariffs, so we'll be listening for what tariffs actually get imposed and what the potential impacts of those are. Historically, markets show both gains and declines during these periods. 2021, Dow Jones Industrial, S&P, and NASDAQ all reached new record highs on Inauguration Day. So we may see some, pop in the Trump stocks on Inauguration Day. Conversely, 2009, Dow declined. Again, 2009, right before the Great Recession. 2025, so Trump's second term, upcoming inauguration, stock market experienced volatility. Analysts suggest the market's performance this month will depend on several factors, being the 20th being a significant influence, and policy announcements. The note can influence market sentiment, other factors, economic indicators. Again, we talk about CPI, PPI, etc. Got earnings, again, earnings matter. Also global events. So looks like it's been a mixed bag, but again, looking at the policy and possibly, what he says during his inauguration may increase volatility. Again, Trump stocks may get a pop. So I hope that all helps and gives you some ideas of how to make money trading in January 2025, being the first year on an inaugural year of a presidential cycle. Love to hear y'all's further feedback, comments about other ways to make money trading in January 2025. What do you think of ChatGPT's response? What do you think of this seasonality? You think we'll see historical, traditional seasonality in January 2025, or will it be an anomalous year? Okay, so now we'll go back to ETFs. So if anybody in the chat has a particular ETF you want to take a look at, if I missed them, or Todd, if you'd remind me of the one you wanted to take a look at, we'll try to take a look at those. Just a quick reminder, when we come up with our market ideas, trading strategies, trade ideas, be they long or short, we can then jump over to our ETFs Google Sheet, find an ETF with the risk reward profile, the amount of leverage, etc., that you would like. Using our ETFs Google Sheet, and you can get 24/7 access to our ETFs Google Sheet by joining our Patreon. I don't have any changes for this week. Okay, so FXR is one Todd wants to take a look at. So let's see if we have that somewhere in our ETF Google Sheet. FXR, I assume that's the rupee. So I have most of the foreign currency ones, so it's not in our main sheet, probably not in our research sheet. I have most of the foreign currency ones in the ETF database sheet. So we'll see, we don't have FXR. So as you can see, here's the other foreign currency ones that we have. So we can add that. And then we can take a look at it in FinViz. So if I plug that in, we get the data from the Google functions and see how it performs. So we see the 52-week range, get the FinViz URL in the FinViz URL column. So this says a First Trust Industrials Producers. Okay, so let's put that in there. Looks like it pays a dividend, small dividend. It is optionable, it's not shortable. AUM sizable, billion, 2 billion. Pretty low volume, so it's going to be choppy. Industrials index. So it looks like it's coming down to its 200-day. Looks like it's broken down significantly in December. Again, coming down to the 200-day. Still relatively high. Just broke down below its short-term weekly moving average. Got some distance from its 50-week moving average. Again, still relatively high on a monthly standpoint. See what this is. Here's the holdings. So manufacturing, transportation. So industrial comfort systems. So that's got to be like an air conditioning. On EMCOR, engineering construction, pack car, trucks. bar machinery, block. So interesting, American Express. So let's see what their definition is. Industrials, equal weight from the Russell 1000, and industrials and producer durables. So it sounds like quite, if it's in the Russell 1000, it's probably got quite a few small caps. So again, looks relatively high. If you have any further comments about that one, Ketan, why are you looking at that? Okay, always in the top of the ETF flows. So yeah, it's relatively high. You think it's going to continue upside? What do you think of the composition? Again, potential looks like it's headed back down. See if we can get other information from the ETF database. U.S. industrial sector, domestic market, transportation firms, commercial services, quant-based screening methodology, XLI. It looks like it's such as XLI, so it's going to track similarly to XLI. And look at the holdings. Some aerospace, South PACCAR, ADT, so security, Amex, Square, Owens, Corning, so materials, Genpack, Brunswick, so pretty diverse Huntington Inglis, so diverse mixture. So again, that said they used a quant-based formula, so it might be worth understanding more of how that all works. So I hope that all helps. Again, if you trade FXR, have further opinions, is this a good going forward? Do you think it's got further downside? Wait for further dip? Love to hear your feedback on FXR. Okay, MD wants to look at cybersecurity. The main one I know of is Hack, and it's probably in our research sheet. See if I've got it in the main sheet. Nope. So got a couple, Hack and iHack. I believe we've looked at these in the past. So you can see here's Hack and iHack. These are both long on cybersecurity. So you can compare their risk reward profiles, see where they're currently at. So they're both relatively high. So looks like they recently made new 52-week highs. So again, risk much higher than reward at this point, unless you think they're going to continue to trend up. They do have some room up to their top. So see where each of these is in their FinViz profile. So here's Hack, probably the most popular cybersecurity. Again, very high right now. Trending up. So yeah, it's very near its top and trending up. So if you think that upward trend, it did break down recently, but out of that upwardly trending channel, broke down below its 50-day moving average. So again, pretty high. Looks like it pays a dividend. So if you think that trend in cybersecurity is going to resume, hack or iHack. You can pick whichever one has the best risk reward profile. Looks like, again, let's see, hack's a little better than iHack. Top to bottom, hack's a little better than iHack. Looks like hack could perform, but iHack's holding up possibly a little bit better. Again, you can compare their composition, so CyberArk, Juniper, Okta, CrowdStrike, etc. Fortinet, Akamai for iHack. Look at hack. Broadcom, Cisco, CrowdStrike, Palo Alto, so General Dynamics, Northrop. So different composition between those two. So you can pick whichever one has the risk reward profile, the composition you prefer. Again, if you think cybersecurity is going to resume trending upward, those might be good. Although again, it does look like they're breaking down a little bit and might be suffering from that rotation out of technology in general. I'll try to check the, keep an eye on the chat, and we'll quickly go over some other ETFs, the sectors that we've talked about. So again, we've got all the longs and shorts for the various technology sectors, etc. Longs and shorts on Bitcoin. And watching cannabis bottoming. It doesn't look like it's swinging back up yet. And China down again, so long yen, short yang, etc. We're long now BDRY, so it kind of bottomed and swung back up recently. Again, we're already long BDRY. It's on dry bulk shipping. Again, watching, see if the euro bottoms, etc. Again, rotation out of financials. Again, gold, long and short. So GDXU long, GDXT short. We've got several other alternatives. Healthcare. So we've got a couple longs in healthcare. Again, expect volatility there. Also got the longs and shorts on biotech. So again, long Lab U, short Lab D. Again, I expect with that JP Morgan Healthcare Conference, volatility in the biotechs. Could also use the XBI, or which is the S&P sector, or IBB, which is the NASDAQ sector. You can see their risk reward profiles in the sector sheet of our ETFs Google Sheet. Talked about gold, healthcare. Looked at India, coming down, not a whole lot of risk reward profile. Mexico down. So natural gas trending up. So oil, if you want leveraged oil, cold, or just UNG, UNL. Non-leveraged, again, a lot of volatility. So be careful, but long-term trend, colder weather up. Again, oil headed up again, so long gush, or USOI, UCO, USO, short drip, or SCO if you think that was overdone. Home builders, I looked at nail, but I think there's potentially more downside in the home builders and high mortgage rates. Risk reward profile looks pretty good, but it's still, relatively high, but one you might want to take a look at if you think home builder is going to rebound, like with the California fires. Also, another one I wanted to point out is on coal. So we'll talk more about this tomorrow. We see METC. This is not an ETF, it's an individual coal company. So we do have one ETF on coal. I think it's called coal. Yeah. So we see the risk reward profile for the coal ETF. So it's below its support. So if I mark that down, it's got about 1.34, 1.36. So compared to METC, got a 2.4. So in this case, I'm gonna, we'll talk about it again tomorrow. I'm going to watch METC for another long in coal. Again, Trump's talking about clean coal, etc., more focus on coal. So I think there might be a good opportunity to re-long on coal. You see it's relatively close to its 52-week low. Again, a lot of potential upside, a little bit better than BTU from a 52-week standpoint, but not bottom to top. And we've got the long and shorts on the NASDAQ, etc., small caps, Russell, etc. Silver, long AGQ, short ZSL. Got individual single stock ETFs with various leverage and main sheet and our research sheet, etc., just to find on single stock ETFs. Again, we've got a variety on bonds. Again, when that swing back up in bonds, you could try TLT, TYD. We're already long TMF to the leverage long on 20 plus year. Again, watching uranium, see if it comes back down. Volatility, short, SVXY, UVXY long, VXX. Again, we're watching wheat, but we're watching the wheat futures that comprise WEAT, getting pretty close to its 52-week low. But again, we want to see the wheat futures bottom, and then we'll go long wheat using WEAT again. Again, we're looking at the yen long again. You can use FXY unleveraged or YCL leveraged. And you can see it made a recent low just below 20, bounced back up a little bit. So again, we're looking to long the yen again with YCL. Going into that next BOJ interest rate decision, they're expected to hike again. And last time that caused that yen carry trade unravel, got a pretty good spike in the yen, made some money with YCL. So again, we're looking to do that again. We'll talk about that in more detail tomorrow. So, okay, if I miss your ETF or a stock you want us to look at tomorrow, I apologize. If you'd please put those in the comments to this video or in our Discord. Again, please tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, numbers, etc. Anyone else is an imposter. So again, if you'd like us to research any further ETFs, you want us to look at a single stocks tomorrow, please put them in the comments to this video or in our Discord. Also, we'd love to hear your suggestions about what we can do to improve our weekly trading game plans, any of our videos or tools, Google Sheets, etc. We really need your feedback. Also, what do you want to see more of or less of in these weekly trading game plan live streams? We could shorten or cut out segments that you would you prefer us to. We can add more time in sections that you would like us to spend more time in. Our goal is to add more value for all of our BeachBum traders. Greatly appreciate it if you'd hit the like button and share, repost our content to your fellow traders. Help us. We really need your help. We're pretty lousy at sales and marketing, so we need your help to continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you to everyone in the chat who joined us and participated in the chat today, everyone watching after the fact. I hope to see you all back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan for the trading week of January 13th through January 17th. We're in part 2 of our weekly trading game plan. We'll take all this market analysis, trade ideas, trade strategies, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also look at how we can use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So thank you again for your participation and for watching, and have a great day.